So the world markets are expected to grow at a healthy rate on an annual basis. The Indian market made up 4% of our revenue in Q1FY25, experiencing a 19% decrease compared to Q1FY24. This performance was by design, and we are currently evaluating various strategic options to determine the best path forward for this business. Moving to R&D, our total expenditure in Q1FY25 was rupees 489 million, representing 5% of our base business. We filed 8 ANDAs during the quarter and received approval for 7 ANDAs. As of June 30th, 2024, Gland and its partners have filed 356 ANDAs in the United States, with 295 approved and 61 pending approvals. Currently, the company holds 1,708 product registrations worldwide. During the quarter, the US FDA made 2 surprise inspections of our manufacturing sites in Hyderabad. The inspections concluded with 2 and 3 Form 483 observations at Dindigul and Pachimalaram, respectively. As previously communicated, these observations are procedural and do not affect our compliance status. While the generic business is progressing as planned, our biologics CDMO business is also experiencing positive momentum. Our biologics facility in Genome Valley is attracting advanced stage interest from multiple players for contract manufacturing of monoclonal antibodies and novel plasma-based proteins. In addition, we are in discussions with a leading biologics company for a potential strategic collaboration. This collaboration could involve large-scale contract manufacturing of 4 biosimilars with a possible in-licensing opportunity for Gland Pharma in specific markets of interest. Although this discussion is in early stages, it represents promising avenues for Gland Pharma to maximize its value in both CDMO and complex portfolio expansion. We will continue to update you on our progress. Now turning our attention to Cenexi, the business recorded rupees 3,883 million, which is euro 43 million in revenue this quarter, with a gross contribution of 78% and a negative EBITDA of rupees 286 million, which is euro 3 million. We are pleased with the progress made and the positive impact of our cost control and efficiency efforts. While we remain optimistic about the opportunity, I must inform all of you that Cenexi is still a few quarters away from a complete turnaround. Alain is here and with us today to provide a detailed overview of Cenexi's performance. Before passing the call to Alain, I want to reiterate that Gland has had a positive beginning to the year and is on track to achieve its targeted performance amidst expanding business opportunities. We are optimistic about even stronger results in the coming quarters. Thank you, and over to you, Alain.
Thank you, Sadhu. Good evening, everyone. Cenexi's performance demonstrated an upward trend this quarter. While revenues increased, we also successfully reduced losses through improved operating cost leverage and continued efforts in managing costs and efficiencies. Our Fontenay manufacturing site near Paris, a significant contributor to overall revenues, has shown continuous improvement in operational performance. We are now realizing the benefits of actions initiated earlier this year, including operational efficiency enhancements, additional weekend shifts, organizational changes, optimized production planning, and maintenance reorganization. As a result, this quarter, the site shipped higher volumes while simultaneously reducing backlog. The Fontenay site derives the majority of its revenue from ampoule fill and finish operations, and we are currently adding a new ampoule line. This line will be commissioned during the summer shutdown period of August, with commercial production slated to begin in early 2025. We anticipate that this new line will significantly increase capacity, improve customer service, and generate approximately 10 million euros in revenue in 2025. Our site in Hérouville, in Normandy, is poised for future growth, with significant new business expected from ongoing technology transfer projects. I am pleased to report that these programs are progressing well, and our new aseptic gel line will begin commercial production for a key customer before the end of the year. Our operations in Belgium and in Osny in France remained on track, and we are fully committed to delivering on our business plans for the year as expected. We are also gaining good traction from partners in new areas outside of small molecules, such as biologics, plasma fraction, and several difficult-to-make technologies. While we are making good progress and our course correction plan is gaining momentum, I must also share a few important updates that may impact our performance in the next quarter. First, the July to September quarter will be impacted by August's typically lower activity levels due to the European holiday season and planned summer maintenance shutdowns at our plants. Notably, our Fontenay plant will have an extended shutdown of 3 weeks to accommodate the installation and connection of the new ampoule line. Second, based on the latest forecast, we reaffirm the outlook communicated during the last investors call. A positive EBITDA for Q4 of this fiscal year and a positive EBITDA for the next fiscal year, driven by increased revenue exceeding the 200 million euros threshold. Thank you. I will now turn the call over to Ravi to discuss financial performance. Ravi, please proceed.
Thank you, Alain. Good evening, everyone, and thank you for joining us for our first quarter earnings call. I hope you have had the opportunity to review our financial results and investor materials disclosed to the stock exchanges. Let me share the performance highlights for the first quarter. Our consolidated revenue from operations reached rupees 14,017 million in Q1FY25. However, Cenexi revenue in Q1FY25
Sorry to interrupt, sir. We have lost your audio. Hello?
Yeah, can you hear?
Yes, we can hear you now, sir.
However, Cenexi revenue in Q1FY25 is not comparable with Q1FY24 due to acquisition of Cenexi consummated in the end of April 2024. The revenue grew by 16% compared to the same quarter last year. This growth was primarily attributed to the base business, excluding Cenexi, which grew at 14%, led by increase in volumes of existing and new launches in the US market. Other income for Q1FY25 reached rupees 514 million, primarily comprising interest on fixed deposits. This is an increase compared to Q1FY24, where other income was rupees 375 million, largely due to increase in interest on fixed deposits. Our gross margin for Q1FY25 was 60% compared to 63% in Q1FY24, impacted by the product mix at the base business for us. However, Cenexi's gross margin improved to its historical level of 78%. In Q1FY25, we achieved an EBITDA of rupees 2,654 million, an 11% decrease compared to rupees 2,982 million in Q1FY24. This decrease was largely due to the consolidation of Cenexi's negative EBITDA during this quarter. Our EBITDA margin for Q1FY25 stood at 19%, down from 25% in Q1FY24. Our base business, excluding Cenexi, EBITDA margin remained stable at 29% in Q1FY25. With the active measures taken at Cenexi, we expect our consolidated margins to improve as Cenexi's turnaround progresses. Our net profit for the first quarter was rupees 1,438 million, a 26% decrease compared to rupees 1,941 million in the same period last year. This decrease was primarily due to the impact of Cenexi. However, the PAT of our base business grew by 20%. The consolidated PAT margin for the quarter was 10%, and the effective tax rate for the base business was 25%. Total R&D expense for Q1 FY25 amounted to rupees 489 million, an increase from rupees 457 million in the same period of the previous fiscal year. This represents 5% of our revenue from operations, excluding Cenexi. As of June 30th, 2024, our total cash and equivalents on a group level stood at rupees 30,488 million, and including the outstanding loans on Cenexi's books, our net cash position was at rupees 27,430 million. We generated rupees 4,277 million in cash flow from operations during the 3 months ending June 30th, 2024, compared to rupees 629 million as of June 30, 2023, due to improvement in cash conversion cycle. The average cash conversion cycle improved, reaching 148 days for Q1 FY25, compared to 233 days in the previous year, due to reduction of inventory. We invested rupees 637 million in capital expenditure during the current fiscal year, largely allocated towards upgrading and maintenance capex of Cenexi business. With that, I will now turn the call over to the moderator to open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Sayon Mukherjee from Nomura. Please go ahead.
Yes, hi. Thanks for taking my question. So just one question on the U.S. business. There seems to be some slowdown or drop in the U.S. revenues, ex-Cenexi, quarter on quarter. So can you just explain the dynamics there and how should we think about in the subsequent quarters?
I think the major difference is, I would say, on the milestone. As you see, last quarter we had licensed some complex products which gave a larger revenue. So I would say the decline of US about 14% from previous quarter, 8% is attributed to that. And if you see the quantity-wise, it's 2% lower. And also I would say it's a product mix being launched happening back to one of the GPOs, which is a low value, I would say, high volume. And because of the launch quantities, we had to supply a lot more quantities, which substituted the other products. So that kind of, I would say, small impact, but it will normalize over a period of time. So we still continue to, I think over the next few quarters, it's normalized numbers. So I would say it's more a positive impact.
Okay. And so my second question is on, your comment on the domestic business, your plans around that, and also acquisitions. If you can throw some light, what are you thinking on both these fronts?
So, yeah, hi, Sayan. This is Ankit. So on the domestic business, as you would understand, most of our facilities are designed to supply for the global markets and predominantly US. When we supply in India, we use the same facility and somehow it compromises our overall economics on the business. We don't intend to scale that up unless we have found a solution to have a facility which is more dedicated for the India business. So I think that addresses that point. On the acquisitions, I think there are two areas wherein we are largely focused. One is to look at opportunities on the complex injectable side, which is more to do with the high R&D focused investments. And the second part, which we are very keenly evaluating, is building capabilities also on the manufacturing side. Today, most of our capacities and capabilities are on the small molecule side. But even there, we feel that we have the ability to further go up and see if we can do more of difficult to make products. So this is the large near-term focus. Obviously, on the long term, we'll have to think through if we need more organic capacity to cater to our current growth, which is coming from US and ROW markets. But in the short term, these are the two focus areas for investments.
Right. Thanks. And just one last question, if I can. Of the 61 ANDAs which are pending, is there a split available between Gland's own ANDA and partner ANDA?
I can give you a exact number, but most of it will be Gland ANDAs because lately everything is filed by Gland.
Okay. Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thank you so much. Sir, given that Fosun sold a fairly large stake, in Gland this quarter, what is the thought process in terms of holding in the company? Have you had any conversations with Fosun?
Neha, for some reason we couldn't hear your question well. Is it possible for you to stay I don't know if it is to do with speaker or something. The voice was not clear.
Ankit sir,
Hello, Neha?
Sagar, I think she has dropped off, so maybe we can take the next question first and we'll have her on the queue soon.
Sure. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So just to continue on this milestone income, is that the reason for the quarter drop in the gross margins for the base business?
What's the question? Is that the reason?
Yeah, so basically trying to understand the dip in the gross margin as well, both quarter as well as year-over-year, when we had good, relaunches or certain complex product launches as well in the quarter.
So if you see, it's basically what I'd given answer for the first one. We kind of supplied more of heparin because of the new GPA contract we got. The contribution margin on heparin is lower compared to that. So it's the margin I think is around 25-30%. So the volumes what is supplied to last quarter is almost doubled. So that kind of diluted the overall margin. But it will normalize over the period because you supply when you start your contract, you supply 4 months of stock. So that can have taken away our capacity with a low margin product. But that will be fine from next quarter.
Understood, sir. And from the biologic side, while the facility was built, from a Sputnik vaccine point of view, and since then the facility has been available, it's taking quite a long time to, get the new contracts. And that is one. So if you could share further there, and this collaboration which involves large-scale contract manufacturing. So here, we're not sharing too much of details, but what can be the timeline to understand the commercial benefit of this collaboration?
Well, we can't name the company. Probably it's a quarter, I would say. Some clarity will come up on how this happens, but the discussion is around investment in the large-scale production compared to what we have for some of the biologics what they've filed and some what in the commercial stage. And also in parallel, also licensing some of the molecules for our other markets, 3 or 4 biologics products. So it's a combination of a CDMO business to expand, as you know, a lot more attractions come in the recent months for Indian companies. So I would say it's a good sign. So this is in that, I would say in that direction. CDMO, combination of CDMO business for some of the commercialized and yet to be launched products, and in licensing of some of the molecules which have gone into clinical. So it's a combination of that. So more clarity we can give you in a quarter or so.
Understood, sir. And just extending to this as an industry phenomenon of this Biosecure Act, is that also sort of benefiting us, or and sort of being Chinese promoter company, we are not party to that?
Yes, for sure. I think what I just mentioned, I think that also is result of this, I would say, because I think we are seeing more inbounds than compared to before, and they're looking India as a second base for a lot of companies to have to de-risk themselves. So I would say that would benefit for CDMOs in this space.
All right, thanks. That's it from me.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, am I audible now?
Yes, ma'am.
Yeah, Neha, it's better.
Okay. Thank you. Sir, we saw Fosun sell a pretty large stake in the quarter. Have you had any discussions about how they are thinking about their ownership in Gland? Do we think it goes down further? Over the longer term, we have talked about evaluating front end in the US. How should we think about that?
Yeah, from a Fosun perspective, we don't really discuss about the shareholding. We only talk more about the synergies and how to expand businesses in different geographies with their network. But there's no communication around the equity and how they sell. We only know post factor, I would say. What's the other question now?
On the long-term strategy for the US, because I think last year we were considering, or evaluating a hybrid model of possibly going front end on our own. So is that still on the table?
Yeah, it is. It's still under the table. It's on the table. We are evaluating, but we can't comment. I think it's too early. But it's not like our core focus will be CDMO and also getting into more complex CDMO. That will be the focus for the company, with more and more companies approaching us on the bio side. For sure, that will be a key focus in terms of investment. At the same time, the general business is key for us, so that will continue. But we have to see what are different options so that the base business will grow at least at a certain rate while we build the other part of the business.
Understood. And did I get the previous comment right that the biosimilar discussions that are going on would require new investments in large scale manufacturing?
Yes. So while we can take on the CDMO and the smaller scale batches, but it also requires investment to increase the capacities what we have. And since it is backed up by CDMO contracts and also the commercial volumes, so that evaluation is happening. So if it's backed up by that, then we'll work out the investment plan for that as well.
Understood. And one housekeeping question, if you could just quantify the milestone and the profit share number for the quarter, please.
Give me a second.
Profit share for this quarter is 10%. This is I'm saying ex-NXE, and milestone is 9%.
Okay, thank you so much, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Karthik, who's an individual investor. Please go ahead.
Yeah, good evening. Actually, is there any one-off from Cenexi in this quarter?
No, there's no one-off. So it's a continuous CDMO business, so there's no one-off.
Okay. Where do we expect the next leg of growth to come from for Gland? Are we continuing the plasma project and biosimilars which we are discussing in the previous quarters?
Yes, that's continued. And also the complex products, we have filed the 6 products till now, so few are the products on that. And, one suspension product we have filed last quarter out of the 7 what we have filed. So that's another growth lever, I would say. And of course, the bio-CDMO side, where we're seeing a good traction, including the plasma project.
Okay, thank you.
Thank you. The next question is from the line of Bino Pathiparampil from Elara Capital. Please go ahead.
Hi, good evening. Mr. Sadu, just a question on the U.S. market. Last couple of quarters, your commentary was very positive in terms of customers coming back, inquiries going up, a lot of demand for products, etc. Is that pretty much as great as of today, or we have seen a bit of cooling off in that hike in the demand over the last couple of months?
No, I would say the positivity is still there. I mean, it's no different than what you have seen. If you see compared to the last year, it's almost the volume wise, it's gone up by almost 30%. But if you see the previous quarter, the quantity can't really compare. It's almost same. I think gone down to 2% US, but it's more to do with how many batches you can make on those lines. And it's more a capacity situation on a couple of lines which impacted us a bit. But otherwise, the demand is there, and on an annual basis, we'll still be on target to what we have envisaged at the beginning of the year.
Understood. So last quarter, there was a high element of milestones. So excluding that, this quarter is, can you look at this quarter as a sort of maintainable base on which you will see some improvement as the quarters come by?
Yes, I would say so because, like I said, the milestone income was almost, I think, 16% last quarter because of some complex products getting licensed out. And, this is not like, it depends on which quarter you license this kind of products, and not every quarter you are filing a complex product. So, but on an annual basis, I think we're still moderated, and the business should grow.
Got it. One more question on Cenexi. So next quarter, when we say that we will have a 3-week odd shutdown, if I say roughly 1 month shutdown, is it fair to assume that the 2Q revenue will be 2/3 of 1Q revenue? Is that a right way of looking at it?
Give me a second. It's not clear. Can you repeat that question? A little not clear.
Sure. So my question is, in Cenexi, we talked about a 3-week, 4-week shutdown in 2Q.
Right.
So is it fair to assume that the 2Q revenue would be 2/3 of 1Q revenue level?
Yeah, correct. So that's correct. But at the same time, we're also using that time to install a new line, so which will help us actually to produce more volumes in the future. So it's not that we're completely wasting that time, I would say, but at least utilizing that time to install a new high-speed line, which will increase the volumes in the future.
And besides that, every year we have a shutdown of roughly 2 weeks in all our plants because of the summer break and heavy maintenance. So the actual impact is only 1 week more because of the installation of the new line.
Got it. Thank you. Thank you very much.
Thank you. The next question is from the line of Rahul Agarwal from Himalaya Investment. Please go ahead.
Thanks for the opportunity, sir. Can you quantify the extent of the milestone and profit share component for last quarter versus this quarter?
Yeah. So by last quarter, do you mean Q4 or Q1 of previous year?
Q4 of FY24. Yeah.
Q4 profit share was same, 10%, and milestone was 15%.
Okay. And this quarter, the profit share is 10%, milestone is 9%. So there's a gap of 6% on milestone.
That's correct.
And milestone, I'm assuming all this is 100% gross margin, so it flows straight down. So it affects both your gross margin and EBITDA margin.
Yeah, it may not be 100% because there could be some costs related to the batches filed and all, but largely yes.
Got it. Got it. And putting it together, sir, from a full year perspective, what sort of a growth do you see in your base business ex of Cenexi for the full year?
The mid-teens, that's what we guided. And
from a margin profile perspective?
From EBITDA, around 32, 33.
Understand. Thank you so much.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Ankit for closing comments.
Yeah. Thank you everyone for connecting today. We understand most of the questions are addressed, but if there are any follow-on questions, please do feel free to reach out to us. We'll be available and happy to address. Looking forward to host you the next quarter soon. Thank you.
Thank you. On behalf of Gland Pharma Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.